Before we dive right in, I think it's appropriate to provide a definition of what buy now, pay later is for those who may not be familiar with it. So as Julian and I were talking about this, we decided it's essentially like layaway 2.0. But in this version, after you make an initial payment of typically 25%, you get to take the item home while you finish paying for it. In the old days, you'd make that payment, you'd have to leave the item there. And after you got done paying for it, you could take it home. So many of you might say, okay, well, that just kind of sounds like a credit card to me. And yes, in some ways it is like credit, but repayment is made over a defined time frame in equal increments and sometimes without interest. So there are about a dozen or so BNPL providers in the US. Among them are names that you have likely heard of, and a few of which we'll mention during our remarks. But Erin, before I dive in, I think you have a poll question for us.
I do. Let me pull that up for you. Okay. Our first question is, how many times have you used a BNPL service? 0, 1 to 3 times, or more than 3 times? I'll give everyone a few moments to record their responses. All right. So it looks like 74% of our attendees have not used a BNPL service, myself included.
Okay, well, that is very helpful. It will help us level set in the amount of detail that we provide. So as for the agenda today, Julian and I are tag teaming, I guess it is. First, we'll talk about BNPL models, products, and the sectors that offer those payment options. We'll then provide some information about the bank and payment industry reactions to these fintech providers of BNPL services. We'll talk about the current market for BNPL, and then we'll finish with discussion. And here I'd like to say that, if y'all have questions, feel free to go ahead and put those in the chat, and Erin will moderate that for us as we go along. Okay, I think we're ready for the first real slide, Julian. Okay, so buy now, pay later business models, products, and sectors. As it relates to business models, there are essentially 4 as we've defined them, and I'll give you some insight into those first. So there's the pre-POS BNPL options. Those are offered directly to consumers by fintechs before a purchase is ever made. And they generally target millennials, Gen Z consumers, and the financially underserved who may have no credit or bad credit. The credit limits that are associated with these types of BNPL options tend to be lower. So if you're one of those folks where you really don't have a lot of credit and you're going to use this, you might see that you get a BNPL initial offer of $250, for example. But they can also range into the thousands of dollars. And differing from credit in that when you apply for a credit card, you have the whole hit on your Equifax or TransUnion account, looking at your payment history and how many accounts you have open and all of those types of things. BNPL uses something called a soft credit score. So basically what they're doing is verifying your credit history, your age, and that you've got some kind of salary, right, that you'll be able to utilize in order to make these repayments. When you get the pre-approved type of BNPL, you can use the BNPL product for multiple transactions up to whatever the limit is. So if you have an open to buy, so to speak, of $250 on the BNPL that you've been approved for, you might spend $50 at one merchant and $75 at another, and another, bit in 3 or 4 different places, which is perfectly acceptable up to that limit. You wouldn't be afforded any more credit until you paid those BNPL obligations off. So one example of a BNPL provider is Klarna. And in a moment, I'll show that to you. But Klarna kind of creates like this platform for shopping. And I'll talk more through that after I give you another example. Klarna would be an example of one, though, that would keep you pretty capped, at least initially, at a lower limit. But that said, there are a lot of BNPL providers that have entered the market more recently. And these new providers tend to target broader market segments or niches. And an example of a niche provider would be Uplift, which offers BNPL that's specific to travel. On the Uplift site, you'll see that you'll be able to book your hotel, your flight, any number of things, your excursions and so forth. So what I asked Julian to do here is to put the slides up with a couple of screen grabs. The upper half of the slide is Klarna. And so you can see here, the slide in the upper left corner would show you what you'd be greeted with when you arrived at the Klarna website. And you could say, okay, cool, I want to set myself up for Klarna. You provide the necessary information and so forth. And here you can just see the range of types of segments of merchants that you can interact with. So it's everything from electronics to beauty products to kids stuff. It just runs the gamut. In the center part of the upper slide is an example of some of the merchants that have contracted with Klarna. And here it ranges from Etsy to Shein to Valentino, Instacart, I mean, Nike, there's the whole range. What Klarna does, though, I think we could call it like a full-on shopping platform. To me, this looks like a mall online, right? You can hit all these different stores with one-stop shopping, basically. And they also provide you information about what's on sale. They provide deals and coupons. They'll even do some price comparison for you, making it very easy for you to shop, which can be a good or a bad thing. On the bottom half of the slide is an example of Uplift, which is another of the pre-POS BNPL providers. And this one, as I had mentioned, targets travel, okay? And here you can see that you go online and you provide the information, you find out what your credit limit basically is for this type of BNPL. Once you've done that, you're free to start roaming the country, so to speak. You can book your hotel, your airline, a rental car, excursions, you can book packages and pay for it through Uplift. So in the center of the screen there, you can see how that might impact, a decision about how you're going to pay for your travel. So in this particular example, the total cost of the travel that's been booked is over $1,200, which of course you're free to pay for in one fell swoop if that's something that you choose to do. However, Uplift lets you spread those payments over the course of up to 18 months. Once you've made the determination to do that, Uplift is actually going to charge interest on that trip. And you can see that you could be paying as little as, $75 a month or $120 a month, depending on how you decide to structure that.
One thing that I would like to point out here is that where buy now, pay later companies differ from, say, a travel site like Kayak, or when you're on Nike.com or J.Crew, is that they really try to influence the consumer in how they shop. And so, for example, with Uplift will say, hey, how about we found this deal on ziplining? How about we add this excursion to your vacation? Imagine how great that's going to be. In addition, it's only going to increase your monthly price by $6. And that's really enticing for the consumer because you're splitting a $120 fee for ziplining to a $6 a month fee. And so it seems a little bit more manageable. However, the total cost is just getting bigger and bigger and bigger. And to double down on the Klarna side is that there's some buy now, pay later companies out there that are actually getting into your DMs per se. And so, for some of us that don't know what a DM is, it's basically a direct email. And it's telling you, hey, Terry, that's a great sweater that you have there. How about I give you a 20% off coupon that you can now spend at J. Crew? I know you like J. Crew. And so that's that incentive and that understanding of the consumer that these buy now, pay later firms have is a little scary because your bank can't direct message you like that. And they can't incentivize you to spend gradually more, getting you more in debt.
Yeah.
Terry, I don't know if you want to add anything else.
Yeah, I think that's a great point. And one thing I want to do is to point out that I misspoke, that what you see on the screen in the center section there is the additional interest that you would be charged if you spread those payments out. So Julian's point about the subtle messaging that happens and maybe the upselling that happens is nice. I mean, it's nice that someone's recommending something that you might like, but it's also perhaps incenting you to spend more than you had planned on, or to make purchases that just weren't even on your radar to begin with. But it is interesting that how they're able to aggregate information for merchants, which obviously is a draw for the merchant community. I mean, if you could, as a travel provider, have your information displayed like this, and then prompt someone who's just beginning to take a look at this to maybe come investigate your product. And I have to raise my hand and admit that once I started looking at this, I kind of went down a rabbit hole with the vacation packages, but that's kind of another story. You can see how it's both beneficial and it could be a catch-22 in that a consumer could get way more involved than what they had planned to. So with those two examples of the pre-POS BNPL, it kind of gives you insight into the types of products, which is, you can do the pay in for model, which Klarna, most of those purchases would probably be paying for. And with those, what you're doing is, as a consumer, you're making the payment over a period of 6 weeks. And it's 4 installments. The first one would be when you decide to purchase the item. You pay your 25% down, so to speak. And then over the course of the next 6 weeks and 2-week increments, you'll make, the other 25% of that purchase. So you're just spreading it out a little bit longer than you would with a credit card. So there are a few similarities there. Another thing to mention here is the sectors. So again, these two examples provide you some insight into, you have some boutique, small and medium-sized businesses that will offer this to kind of get traction with their consumers. You've got those that are offering electronics and fast fashion. Healthcare is another one. There's a BNPL provider that is specifically for healthcare payments. I've given you the example of Uplift, which is for travel. There's one for car repair. I think, I can't remember, it's Sunny or Sunlit or something of that nature. And basically what they bill themselves as is those unexpected purchases that might need to be made. So your car breaks down and you don't have the money saved for, the repair, and other options aren't available to you in terms of saving or whatever the case may be. Well, there's a BNPL for that, or you have an emergency dental repair and it's not covered by your insurance. That would be another example. It goes as far as home remodeling, B2B, and even some day-to-day purchases, which I find to be a bit more dicey in terms of, these aren't like those long-term purchases where you can be one and done, or it's a one-hit wonder, but we're looking at now BNPL being used for groceries and gas as well. So I digress, go ahead.
Oh, I was gonna say, that's definitely the slippery slope. We could save this for a different talk show, but some of the taglines that the buy now, pay later firms have for healthcare, it's don't go for the healthcare you have, go for the healthcare you deserve. So they're really nudging consumers and tugging at their heartstrings of treat yourself. And that's a different dynamic, because treating yourself used to be a real treat. and maybe once a month or every quarter. Now it's every day.
Mhm. Yeah, I agree, Julian. It's a slippery slope. And as Julian noted, we'll get into that a bit more in a few slides. So I just kind of ran through the pre-POS types of BNPL options that are available, which would imply that there is a POS BNPL option. And essentially, it functions in a similar way. It's offered directly through merchants, and it tends to target a broader universe of shoppers. So whereas the pre-approval might appeal to someone who's had maybe some difficulties with credit in the past and they don't want to be surprised, they want to know what they can be approved for up front. Those of us that are making the transaction at the point of sale, it may be one of the first times we're presenting with it, or we've learned about it and it seems like a decent option. So merchants are offering buy now, pay later when you go to checkout in the online space in particular. These tend to be higher credit limits, reaching up into the thousands of dollars, and as a result, the repayment terms tend to be longer. So you might go anywhere from 6 weeks to as many as 60 months, depending on the merchant and what you're buying. Unlike the shorter term loans, though, that by and large still are 0% interest, there likely will be interest and or fees with these services, particularly as you go out beyond 3 months. Typically, the interest will vary based on the dollar amount of the transaction and the period of time over which you're stretching it. And we saw that even with the uplift service. So depending on how long you stretch out repayment, you're going to pay more interest if you do that. And you probably see this on any site at this point that you shop on, whether it's Amazon or some of the more boutique types of sites like, I'll just share one of my own, like The Real, which is a consignment clothing site. So that would qualify as the boutique SNB. And just anywhere, basically, buy now, pay later is an option, just like checking out with credit card or Visa Direct or some of those other options that might be available. A third type of BNPL could be classified as hybrid. And what I mean by that is you can go the pre-approval route to get access to that merchant, or at checkout, you could make a determination to go ahead and use that type of BNPL. And some of the merchants that are participating with Klarna, for example, a Macy's, you could go on the pre-side, or as you're checking it out, Macy's could pop up with the Klarna option when you're checking out. So you don't have to make the decision ahead of time. You can make it at the point of sale. And finally, the post POS, that would be the payment industry getting in kind of behind the fintechs that are offering these products and services. So as a credit card holder, you might have noticed that your card company will send you an email that tells you that a particular transaction is eligible for installment payments. Chase and Citi both do this. I'm familiar with that because I'm one of their customers. Others may as well. But basically what they're doing is saying, hey, that transaction you made for your auto insurance that was $1,000 is eligible for buy now, pay later, and you can split that up into 4 or 6 months. And if you make a determination to do that, there's a small fee. So you could still go ahead and use that credit card, get your rewards on after the fact. You might have some kind of emergency that draws down the cash that you thought you might have had to make that payment in full if that was something that you had planned on doing. And you can make a determination that using buy now, pay later is a good option for you and that it's worth the fee. So that's yet another type of buy now, pay later option. Okay, I think with that, we have another poll question. And then after we get done with that, Julian's going to take over.
We do. I am pulling it up right now. Okay, do you feel like you understand how BNPL works? Yes, no, or don't know? I still have a few more answers coming through, so I'll give it another few seconds. Okay, I'm going to end the poll and share the results. 90% yes, 9% don't know, and 2% no.
I'm really curious to know what the overlap is between those that have used it, that think that they know that they feel that they understand it, and then those that haven't used it and know that they understand it. And it's because they know how buy now pay later works that they don't use buy now pay later. We could save that for the Q&A part. We'll flip the script. We will ask the audience questions. So I'm going to talk about bank and payment industry reactions. So when buy now pay later first came on the scene approximately 10 years ago here in the US, banks in the payment industry didn't take them seriously. They thought of them as a gimmick. They're just going to go away, capital and whatnot, access to consumers, because scale is really the name of the game here. However, when the pandemic hit, everyone was stuck at home. So that old TV suddenly felt like it needed an upgrade. And of course, we couldn't just sit around and watch The Mandalorian all day, although it's a great show. We had to get up and move. And gyms were closed, so that made it difficult. So some of us bought exercise bikes or a rower, anything just to get our bodies moving. However, these type of purchases are really pricey. And yeah, you could put it on a credit card, but having that discipline to pay it off at the end of the month or figuring out a budgeting schedule, because you really just needed an exercise machine to get your body moving immediately. And it's not like the local bank was offering a Peloton loan. And so that's why Affirm really found its niche with Peloton and high-end exercise equipment. And that's where we really saw buy now pay later take a bite out of the profits that credit card companies were supposed to see. So McKinsey Consumer Lending Pool data actually shows that banks lost between 8 and 10 billion in revenue per year to buy now pay later companies. And banks are going to take this laying down because that's eating into their margins overall. And so if you can't beat them, you acquire them. And so we saw this with Block. Block actually acquired the Australian buy now pay later firm in 2021 for approximately $29 billion. And that acquisition was twofold. It gave them instant access to a built-in consumer base from Afterpay. In addition, Block has the Cash App, which is another consumer base that Block already had, and then their Square portal for small businesses. And so by marrying all three, they now have a full service stack for the SMB. And they could say to the small business, hey, by using our Square portal to sell your products and services, not only do your customers now have access to the Cash App, they also have access to the ability to pay for stuff over time. And that's really enticing. And so that really gets the revenues going. So that's one example of an acquisition. But if you can't acquire them, if you don't just have $29 billion laying around, you join them. And so you have some banks and merchant processors that have actually partnered with buy now pay later firms. For example, Cross River Bank is one of the largest underwriters for buy now pay later firms. And you'll be surprised the amount of things they underwrite, from the Peloton bike of thousands of dollars to everyday goods. And so this makes their balance sheets a little risky and complicated. Another example here is, as Terry mentioned, where we had partnerships already developing. We have another partnership model with Stripe and Klarna, where Klarna installment program was built into the Stripe payment processor. So now now Klarna customers are able to use their loan product on merchants that use Stripe as their payment processor. So again, expanding access to the credit lines. Terry touched this on a little bit, the credit card providers. So some of us have gotten used to using our credit cards and probably have seen these offers on splitting our purchases. And they range between 4 to 12 months or even longer for a fixed monthly fee. And that fixed monthly fee seems very small. However, it gets built into the product itself. And so even if you pay off that loan early, that credit card loan early, you're still paying the upfront financing for that loan that they offered you. So the incentives are kind of misaligned there. Another thing here is that we have tech companies now entering the market. One example of this is the Apple Pay Later product that they recently launched. Why would Apple launch such a product? One is because they have about 50 million Apple Pay users and 6.5 million Apple Card holders, which they can then drive to their buy now later product. One important thing here to note is that Apple is actually financing a lot of these loans, as opposed to what they're doing with the Apple Card, which is a Goldman Sachs product. They now recently launched a savings product, which is also a Goldman Sachs product. Here they decided we have a big enough balance sheet, we know our customer well enough that we can actually just finance the loan ourselves, which is kind of scary because you're starting to mix technology, banking, but the regulatory structure isn't there yet.
Yeah.
So how do we know?
Oh, sorry. Go ahead.
Oh, one thing I was going to say here is that how do we know that Apple isn't going to be using your location data times your purchasing patterns plus your messaging to start nudging more ads to you? And I don't know about you, I get bombarded with ads. I have an Alexa here at my house, and so I mention diapers, and all of a sudden I see diaper ads all over my Amazon.com or on my email. And it's stressful because I don't need all of these ads in my life. I'm trying to get rid of these ads. And so that's why I have subscriptions where it's like Netflix, and I just avoid commercials altogether.
Mhm.
But Terry, please let me know.
Yeah, I was going to say, I think the Apple Pay Later, though, is really one to watch because it is a controlled ecosystem. And I think out of all of these, it's the only one that is that way. I mean, you already mentioned that, not anybody can get an Apple card, right? You have to be an Apple customer in order to do that. You can only use Apple Pay Later if you're an Apple customer and you have an Apple payment card. And they're pushing this out, I guess, or they're offering it through the merchants that already accept Apple Pay. So instead of a merchant having to sign up to offer the service, it's baked into their relationship with already accepting Apple Pay as a payment mechanism. And as you mentioned, we're living our lives on these devices. Most of us probably are using the wallet, so we've got a variety of payment cards loaded in there. You mentioned that they've got this opportunity to do geolocation. They've got browser history. So it's probably the best position to make a determination about your credit worthiness than all of these others in this controlled ecosystem. But I think it does begin to raise some of the privacy concerns that you mentioned with some of the other providers. I know that I personally have to confess that I don't read all of the terms of use that come along with every update or upgrade, that
You mean you don't read the 30 pages worth of text?
I do not. I'm sorry. I probably really am going to be sorry for not doing it. But it's kind of like, are we opening Pandora's box, or is it creating, a good universe where they've got enough information about me that I shouldn't get too far out over my skis. Although, you know, they know what my habits and my weaknesses are and may have the ability to target those. In a sense, though, it's not entirely different from Starbucks telling me when I need to come in and tank up on a beverage either. So
That's very true. Speaking of the data points, that's one thing that I would like to highlight. So your typical credit card company has like, or lender has maybe 25 to 50 data points on you. And those are things like income, job history, where you live, the duration of that living situation, if you rent or own. These buy now, pay later firms are actually running in a higher click. So they're running in 300 to 500 data points about you. And those data points include things like location, browsing habits, shopping habits, because they also have access to your checking account information, because that's one of the onboarding features of buy now, pay later is you need to connect your personal account to the buy now, pay later firm so they know that you have income coming in. And as they see that, it's also, hey, I see that Julian really likes J. Crew. And so I know that I can start just pushing J. Crew ads to him on a steady basis, and he'll likely purchase more and more. And so these decisions that I am making, are they decisions that I made, or are they decisions that I've been nudged to make? Thus overextending myself, which is a very easy thing to do with these buy now, pay later firms, as opposed to the traditional credit card, where if you have one credit card and you start charging up that credit card a lot, the credit bureaus start reporting that data out to your other credit cards. And so they know, oh, Julian just racked up $3,000 here. One, my credit score takes a ding, but then the other credit cards companies are able to lower my credit card limit.
yeah.
So why is Apple entering this space? Why are banks entering the space? Why are other lenders entering this space? It's $100 billion industry. So just last year, consumers spent $100 billion. That's a lot of money that consumers were spending. However, none of the pure play buy now, pay later companies are actually profitable. One example here is that a firm which was one of the rising stars of the buy now, pay later industry, when they IPO'd in 2021, they had a record IPO. They hit a high of over $150 per share, which is amazing. However, today they're trading below $15. So they lost about 90% of their value in less than a year. And I understand that other companies had similar situations where they IPO'd amazingly and now are trading well below their opening. But this seems to be a unique situation because the loans themselves, the underlying loans within these firms, we're starting to see a little bit of weakness, a little bit of buckling is happening here. There are rising delinquency rates. And there's also a shift in consumer sentiment where that old TV that I had with rising interest rates, uncertain economic conditions, I could probably live with that TV now. I'm not going to go out and buy an $1,800 TV. I'm going to stay with the TV that I have. I'm going to stay with the phone that I have. And I'm just going to buckle down myself because the disposable income that I once had is no longer there. And so that creates a lot of nerves. And so that's where you see buy now, pay later companies start trying to subsidize these zero interest loans with more convenient fees in opposition of interest loans. And what I mean here is that when I go and get a buy now, pay later loan, it's now going to have a convenience fee of $5. versus an interest rate of 2.5. And for the consumer, it feels different because this fee is now upfront and I'm not bearing interest because we've been trained for so long that interest is bad. I'm going to try to get the lowest interest rate possible for the longest amount of time. And by saying this is just a convenience fee, it's upfront, it's flat, I pay it now, and it's great. However, it's playing to consumers' underlying wants and needs. There's also, again, rising competition. At one time, there's a plethora of buy now, pay later companies. As we said earlier, there was buy now, pay later companies for boutique, high-end stuff, to medical, to your backyard, to automotive. That created a very crowded space. And we have seen now incumbents, banks offering their own version with their built-in customer base. And so this competition has really heated up. And again, with rising interest rates, it makes it very difficult if you're not a bank to lend out money.
Yeah, Julian, I might tack on to all of those things are kind of playing into the shift in consumer sentiment. I think when buy now, pay later really hit, which was during the pandemic, we weren't able to go out shopping. We weren't able to do things. And there were programs in place that were helping consumers save. So savings hit like all-time levels during the pandemic, which is kind of the inverse of what one might expect. And folks were feeling a bit more free about these purchases. I don't know about you, but it's like also your attire completely changed. So you're at home and you're trying to be more comfortable. And so in addition to all the equipment and the electronics and things that you might have been ordering, you also maybe needed some new yoga pants or some sweatpants because, you know, your day-to-day attire completely changed. So it was more of BNPL for the things that we wanted. And as things are changing with the economy, inflation, interest rates, those types of things, you're seeing a substitution with BNPL being used for needs. And there's also been a lot of reporting about BNPL in the meantime, where we probably have all heard those cautionary tales of individuals that, you know, started with BNPL just pretty innocently. And yes, we mentioned that you can only, you know, use BNPL one time, and until you've paid that off, you can't use it again. But there are a dozen or more providers in the field. So you might have Klarna that you're using for, you know, your electronic purchases, and you put a trip on Uplift and you did something else on a medical BNPL. And all of a sudden you've got all of these payments that are hitting you, not in monthly cycle, but every couple of weeks in some cases with the smaller purchases, and then over a series of months for the larger ones. And you're seeing consumers having real difficulty in managing that. Coupled with the fact that you've got only the soft credit check that's being done in order to provide access to these accounts. Card companies don't have an insight necessarily into what your BNPL spending is. And one BNPL provider doesn't have insight into what your obligations are to another. So you've seen some consumers get into a place where they're kind of spiraling in the BNPL debt. And where it's available, instead of using a DDA account to pay that monthly installment off, some allow attaching your BNPL repayments to a credit card. So some of that debt may be transferred from the BNPL provider to the card issuer, which creates another kind of problem. Something that may have started out innocently and interest-free in the beginning is now a problem, right? It's adding to your overall debt and you're accumulating interest, and it may be impacting your credit score in the end anyway. I just wanted to kind of hit on that as you're talking about maybe the delinquency rates aren't so high, but the sentiment around the service has shifted a bit. And I think that's the reason why.
Definitely. And now, so speaking of consumer sentiment, so for those of us, so I see that 90% of you know what buy now, pay later is and how it works. However, there's a wide range of consumers that don't know how it works. And so those consumers actually, there's been reports by NerdWallet and others that actually show that consumers that were first using buy now, pay later are getting hit with, are starting to notice overdraft fees accumulate on their accounts because they might not understand when the payment is going to come out of their checking account, or their direct deposit isn't aligned with the payment itself. And so they get hit with an overdraft, and then the direct deposit hits from their employer. So these misalignments of time are also impacting consumers. During the pandemic, consumers were able to pay off $83 billion in credit card debt, which is amazing. Now credit card debt is actually back to record levels, even pre-pandemic. So that's the one record we don't want to be, right? So more consumers are in debt, and more consumers are in increased debt. So consumers are actually overextended beyond the point of before 2020. Another thing here is that another economic pressure and competitive aspect here is that exclusivity arrangements have actually ended. It used to be that I could only buy a Peloton with a firm. Now I could use whoever I want. I could use my Apple Pay later to buy my Peloton, or I could just go to Lowe's and use a Klarna application to buy whatever I want. These exclusivities are no longer there, and so consumers are just free to make their choices, which impacts the bottom line of these buy now, pay later companies. Also, there's been calls for regulation from the Consumer Financial Protection Bureau to hearings on the Hill. There's different aspects. There's benefits to buy now, pay later companies, and there's also negatives to buy now, pay later companies. Buy now, pay later companies always make the strong argument of, we're expanding access to credit. That might be true. However, the expansion of credit isn't always the right thing for certain segments, for certain consumer segments. On the CFPB front, they actually published a report recently where they showed that loan approval rates for buy now, pay later is actually increasing. So 73% of applicants were actually approved, up from 69% in 2020. Another thing, though, and probably the most alarming, is that we're also seeing an increase in fees. So as I mentioned earlier, buy now, pay later companies are no longer able to lend out money cheaply. So they need to make up revenue somehow. And so late fees are starting to become more prominent, where buy now, pay later companies always prided themselves on, we'll never charge you a late fee. I changed my mind. We're going to charge you a late fee because it's costly to lend out money at 0%. So we've seen the CFPB report quotes 10.5% increase in late payments now. And more purchases are ending in returns, which gets very complicated. Everyday consumers, myself included, I will buy something and I'll have buyer's remorse. And I'm like, you know what? I actually don't need this $1,200 TV. And I'll go back to Costco and I'll return it and they'll credit my credit card back. And that's easy and fine and simple. However, when you buy it with a buy now, pay later, it's very complicated because I paid 25% of that TV up front. I make another payment, so that gives me like $600, and then I change my mind. I'm still within the 45-day window to return stuff to Costco. And actually, Costco gives you up to a year, which is great. And so if I go before my third payment is due, I return the TV. The traditional relationship there is that Costco is going to credit your credit card. Here, Costco is going to say, go deal with your buy now, pay later provider. And then your buy now, pay later provider has to reconcile the return that you made with the amount of payments that you made. And they need to collect the money back from the merchant, and then they need to refund you that money as well. This has actually been one of the biggest pain points, because buy now, pay later companies are actually coming to consumers and saying, show me the receipt that you returned the TV. If you're like me, I typically just crumble it up and throw it away. And so that really creates a big friction. And some buy now, pay later companies have gotten better about it. They have better automation on the back end that connects directly to the merchant's point of sale. But that's not everyone. And that gets really complicated on the boutique side and also on the travel side. So say your flight's canceled. What do you do? Who do you call? Do you call your airline to get a refund? Well, you didn't make the reservation through your airline. You made your reservation through Uplift. So how, and with all the recent issues with travel, do the same regulations apply to Uplift of making the consumer whole? No, they're a technology company. They'll say, we're a platform. We connect consumers to travel companies, united. Go deal with them. We're just the middleman. And that makes everything very convoluted and very complicated. Now, we have a few questions I see in the chat. I can turn it over to Erin.
Sure. And I think we had one more poll
Oh yeah.
to ask. It's all right.
Yeah,
I
yeah.
will throw it up there really quickly. Poll 3. Do you think BNPL is creating financial access or increasing consumer debt? So creating access, increasing debt, both, or don't know. And while everyone's filling that out, we do have several questions in the Q&A. So once we report this out, I might jump into those since we've got about 9 minutes left for the webinar, and I want to get through as many of those as we can. All right, I'm going to go ahead and end the poll here in 1 second. Okay, I'll share the results. So it looks like 66% say that it's both creating access and increasing debt. Does anything surprise you about the answers?
No, I think that means that people understand how it works. So on the one hand, you're providing access to folks that may not currently have traditional credit. So this is an avenue. And that's great if it's allowing you to make that car repair payment without having to go to a payday lender, for example, or writing a check that's going to overdraw your account. So I think that's part of the benefit. And I think we've really stressed part of the risk with it is that you can really over leverage yourself by using, any number of buy now, pay later providers at the same time for making impulse purchases or purchases that were beyond the budget that you had originally anticipated. So I see both sides. I think it's a glass half. And whether it's half empty or half full might just depend on what your particular experience was.
Mm-hmm. All right. Well, I'm going to go ahead and just go straight into these questions we've received. So one of them was around, do we have any studies? Are there any studies out there on the demographics of those that use these services, such as age, income, industry?
Yeah, so the CFPB is one great place to start. I know that the Philly Fed has started to look at those demographics, and they're using the consumer payments survey. That's an annual survey, actually biannual survey, on what consumers are using to pay. Right. So one, the CFPB is a great first stop, and then the Philly Fed.
Yeah, and then you've got the providers themselves that are constantly putting out reporting, especially when they're talking about who benefits from the use of their services. You'll find some demographic information in those as well.
Yeah, Afterpay is actually a great resource there. They do a lot of self-reporting on demographics, usage, type of usage, and then repayments.
Okay. Another question, what's the difference between the older version of buy now, pay later and kind of what it looks like now? I think it's been around for 10 plus years, right?
Yeah,
Mhm.
Yeah, absolutely. So there really isn't. So Affirm, for example, was started in 2012. However, Klarna, Sezzle were popular forms of payment overseas, right? So Australia had buy now, pay later before the US. And in Europe, Sezzle was the dominant player there. Klarna was too.
and before we had a name to put on what it was, I think back to like Home Shopping Network or is a QVC, those shopping things where they let you do stretch pays. So you might buy something right now and you make payments over the course of several different months hitting your credit card. I think the difference in those types of things that allowed you to do a very similar thing to what buy now, pay later as we know it today is that they had a credit card on file, whereas these buy now, pay later providers are actually extending credit and at 0% by and large for many of these transactions. So I think even in the States, some form of buy now, pay later has existed for quite some time, but we just didn't really have a name for it. And it's been refined and it's being refined as we go along.
And I've seen quite a lot of questions in here around the regulation piece. So is this, designated as a credit product, or is it going to be a separate designation for regulatory oversight? What do current regulations look like? What needs to be put into place? And then also some questions around consumer regulations. What's in place or in the works to protect consumers as well?
Maybe this should have been said at the top. So what I say today are the views of me and not necessarily the views of FRFS.
Yes, likewise.
So I'll speak from my personal opinion, Julian's personal opinion on what I think buy now, pay later should be designated as. I think it's a credit product, and I think it should be treated as such. However, buy now, pay later companies actually have to get money transmitter license across all 50 states to function as a credit product. And they also have to abide to the parameters or limitations that some of the states actually have on lending, specifically small dollar lending. Because at the end of the day, these are small dollar loans that are not really designated as credit. And so the states actually are the ones that impose caps on those small dollar loans. For example, Nebraska has a cap of 31%. Illinois has a similar cap. And then there's other states where installment lending is outlawed altogether. So how do those consumers in those states access these type of products and features? Should they have access? Is their state actually taking away the right to access these type of things?
Yeah, I think the pay in for was a way of kind of skirting around that because it fell under the timeframes and the dollar amounts initially. But as these products are morphing, I think calls for regulation are definitely being heard, and you have enough of the cautionary tales that I had mentioned that some form of regulation is likely warranted, which will increase the cost of providing the service and will likely whittle down the market even further to those who are best positioned to provide these products in the longer term.
And I have one last quick question for you before we wrap up. And I see it on your screen as well, but do you think that buy now, pay later is a fad, or does it have longevity?
Yeah, I tend to think that it's here to stay. It's like the US payment system in general, that once you introduce a payment mechanism, it's really hard to kind of get rid of it. And it's got a lot of nice features and functionalities if it's used properly, and as they're smoothing out some of the bumps in the road with things like Julian mentioned, returns, for example, or, who knows how it's going to fit with travel, with the delays and cancellations and those types of things. I think it has bugs to work out, but it really can be a beneficial product. So it may evolve in how it's offered and what, the features and functionalities are, but I personally think it's here to stay.
Same. I think they're here to stay.
Well, I'm curious to see how it evolves over time, what the next 10 years are going to look like. Well, thank you both, Julian and Terry, for your time today. We really appreciate it.